Hey, what's happening, guys? Corey Smith here with CoreFX, bringing you another weekly analysis video here through T3 Trading. I know it's been a little while since I did one of these videos. I always check out for a little bit over the holidays. Recommend to most of my traders I trade with and everything. Everyone pretty much does around the same. The markets aren't too liquid or really too great of an opportunity to make money through the second half of December through the new year. So, it's the holidays. Banks close a lot for the holidays. People are on vacation a lot. There's just not much trading volume going on. People are closing out their positions on the year, and just not the greatest forex market trading. And so I take that time to spend with family, work on my trading outside of the charts, get things together, get ready for the new year. So I took a little break. I took a break from making these videos as well. Not too much news to be covered through there or anything. So we're back. It's now it's January 7th. So we just got done the first week of the new year. Hell of a week for equities. FX markets had some pretty big moves as well. Nothing too crazy. But all in all, we had a decent start to the year. And January always turns out to be a great trading month. Really, the first quarter of the year is a great trading quarter. So real excited here to get to it. I'm going to go ahead and jump into this video here. What we do with these videos every week is I go over the fundamental events last week as well as the events coming up this week ahead. I go over each individual currencies index, going off of the major 8 that we use here. And I'll go over the technical levels and everything that the major indexes are on so we have an idea of what each individual country's currency is looking like for the week ahead. And then I go through what news events to watch out for this coming ahead week, what we want to be trading around or not trading around, or just aware of overall in the markets and what to expect. All right, and then I have another video that comes right after this where I go over the technical analysis of the U.S. majors and some other pairs. So I'm going to go ahead and jump right into this, guys. Starting with last week, we had the relative performance chart you guys can see here. We had the Canadian dollar, New Zealand dollar, and Australian dollar, all the top 3 performing pairs, with the yen, Swiss franc, U.S. dollar as the bottom 3 performing pairs. Now, this is the perfect example of a risk-on week in the currency markets. So we had equity markets plowing through all-time highs all week. And what this typically means is there is a risk-on sentiment in the markets. People are putting their money in more risky investments and going for higher returns and higher risk because there's a just overall risk theme in the markets of higher risk being taken. So money is going to be taken out of more safe haven assets like the Japanese yen, the Swiss franc, and the US dollar, and put into the more growth, higher yielding, higher growing, faster potential growth economies of the less developed of, Canada, New Zealand, Australia. They're the commodity based. They perform pretty high in times of growth, so you'll get a better return, and people just typically move their money into more performing assets. And that's why we see the stock markets shooting up. Everyone's taking their money out of other places and putting them in the stocks. And this correlates directly to the Forex markets. So this week was a risk-on week big time, and you can see that exactly. This doesn't always play out perfectly. Sometimes, there's other things going on in each individual nation, and this doesn't perfectly, but this is a perfect view of what a risk-on week looks like in the FX markets. So that's what we had this week. All right, jumping over to each individual index's chart, we have the US dollar here. As you guys have seen me calling before the holidays, I was saying that there was first an inverted head and shoulders here on the US dollar that played out almost fully to the target, not quite, but still played out for some good longs. And then we had a failure to break higher, another respect to this trend line, which was also a strong zone, and we had a right shoulder form. And what did price do? It broke right out of the right shoulder, and now we are moving lower. I think this week we could have a little bit of a bull rally in the dollar. I think we could see a little bit of strength return to it. It's been getting crushed. We had a little bit of a base here, so it could break out of this and continue lower, but I think we could see a little bit of a rally. It'd be nice to see it come up and retest this 92.50-ish range up here, and then get some good shorting opportunities to continue to the downside. All in all, though, I'm definitely looking to the downside on the dollar. It's just a matter of when. The euro, the exact opposite. We are looking up. We've been back to this strong uptrend we had all year. Then we had a decent retracement, and now we have come back to it. And we've got a series of higher high, higher low, higher high. I think this week we might see the beginning of a lower low, a higher low, or maybe the completion of a higher low before continuing higher again. I still think the euro's got room to go, but we had some decent, some mixed data last week and didn't see too much of a sell-off yet from the euro due to it. So I think we'll see a sell-off in the euro this week, and then that uptrend will continue later on. Japanese yen, we're kind of still choppy with this chart. We're in this range down here still. You can see the moving averages are just crisscrossing. It's pretty sloppy. The 200 SMA has just been pretty flat straight across here, showing that there's no consistent trend, no clean price action. So we're coming down to the bottom of this range. We could see another bounce up, but if it breaks this 84.50 level, I'll be looking to short it at least down to 84, and then possibly if we break out of that range, we have some potential room to the downside. But all in all, right now, it's still just range bound, so nothing too crazy going on with the yen. British pound, same story as the euro, pretty much. We're back up to these highs, and it's a pretty strong demand zone that we've hit. We did sell off of it a little bit, and we're kind of just moving along this area. I do think that we will come down and retest throughout the 131 area. I think a higher low is in place here. We had a very strong couple weeks out of the pound. I think we might have a little bit of a sell-off before it continues higher, but all in all, I'm still bullish on this pair. You got price trading above the moving averages. The moving averages are in perfect order and spacing, 20 above 50, 50 above 200, all sloping upwards. Nice spacing between them. Price is setting higher highs and higher lows. Beautiful uptrend we got going on here. So now it's really just all about when the trend continues and when we want to get in. CAD, we were range bound in this range for a while, and then we were watching for a break either way, and we broke to the upside. We now have the moving averages crossed and all sloping the right direction. We had this strong couple week push up. I think we're a little exhausted here. We did break up above this strong weekly level, but I think we'll have a little bit of a cool off here, a little bit of a retracement, and then we'll continue higher again. I still do think the CAD's back on track. Then awesome jobs report here Friday. So the Bank of Canada is getting some data to keep them a little bit more optimistic with the rate hikes that they've been doing, and potentially more in the future now like we had thought they had planned. So definitely be looking for more hikes down the road if this data remains strong, and I think the Canadian dollar is going to continue to be strong for at least the first quarter half of this year. Swiss franc, not the nicest chart, but it did have a strong push higher. We've been trading up above this strong weekly support at 96.50. Price keeps bouncing off of it. It made a higher high, now made a lower low. We could see a little bit more of a retracement to fill this gap that you guys can see in here. We could see this gap filled a little bit more, but all in all, right now we are looking to an uptrend. We are setting higher highs and higher lows, so we could see this just continue higher here and push up from here. Taking us to the Australian dollar. Australian dollar is another one. Explosive moves the past few weeks. Really all through December, it was just exploding higher. Equity markets have been killing it. We've had a risk-on environment. Australia's starting to see some better numbers. So it's really just been a very strong Aussie. But now we've hit this really strong demand zone, which is a very, very strong resistance. And price is very extended from the mean. So I think we're due for a mean reversion here as well. I think we're going to get a little bit of a sell-off. Price will come down to around 78 to 77.50 range, I believe. Might come all the way down to 77.50 to tap it. But either way, I think we're going to get a little bit of a sell-off here. If the stock market comes out and has a little bit of a correction this week, we could see that feed into money fleeing the Aussie and heading back to safer currencies like the yen, dollar, euro type of deal. But Swiss franc also. But we'll have to wait and see. All in all, this does look a little bit extended to me. As you can see, it's just ripped higher without looking back at all. So the moving averages are all starting to point upward now. We're getting a nice uptrend out of this, but all in all, I would like to see a little bit of a correction before this continues higher, because it's just starting to seem a little bit overextended to me. Taking us over to the New Zealand dollar. As you guys saw, we were down on this strong weekly support that I was telling you guys. If we saw a break of that, we could see a strong move lower. But what we had was the opposite. We had a inverted head and shoulders pattern on the bottom here. We saw this neckline that did get broken. Price came back to retest it and just ripped higher. As you can see though, this 72 level of overhead resistance is also a very strong resistance and demand zone, as you can see up here. So price has now hit that. I am weary, just like with the Aussie, of correction. I do think that price is going to correct a little bit down to the 71 or maybe 70, 50 area down in here before then continuing higher. all in all, I am all eyes to the north on the New Zealand dollar. I am looking bullish, but it's at a strong resistance here after a very strong push higher. I think we are due for a little bit of a correction to start this week here. All right, so that pretty much does it for the major 8 currencies here that we cover. Now I'm going to hop into the news, see what happened last week, see what we're looking for this week ahead, and just really see what our trading presents us. So as we know, last week was the beginning of the year. It was not the greatest trading week, but stock markets were awesome, and you could see some life return back to the markets. I don't know if anybody was paying attention to the charts and everything over the holidays, but you could see there was just a real lack of movement. Really tight, small candlestick bodies and wicks and everything. Really condensed price action. There were some strong moves here and there in different pairs and all. There wasn't like there was no opportunities, but just compared to a normal trading environment, it was a lot more sluggish. But we're starting to see that return back here. There's always a huge pickup in momentum in the currencies in the beginning of the year. So we really just got to wait for that to happen and jump aboard and make sure we're trading and aware and active and ready to take advantage of opportunities when they present ourselves. This is some of the best trading opportunities of the year. But we'll just have to do what we do, keep on going, building our watch lists, checking the markets, checking the news, being aware, and be ready for it. So starting this week, we had New Year's Eve and New Year's Day. If I switch this over here to show all the news events, you'll get a better idea. If you check this out, you can see there were bank holidays across the board on the 31st and the 1st of this year. So really, a lot of banks closed, a lot less volume, a lot less going on. I wasn't looking to trade at all at the beginning of the week, but second half of the week, things did pick up. Ended the week with a bang. Starting on Sunday, Monday, again, banks holiday closed, not much going on. Monday, we did have manufacturing PMI out of China, which is during the open of the Asian markets. It beat expectations as China remains strong. You know, the numbers out of China have remained consistent, and it's one of the biggest economies in the world, so that's a good thing as far as economic stability and worldwide economic stability. You know, all this stock market growth, everyone's talking they might be overvalued, and recessions, and guaranteed, like, there's no way around it. A recession's eventually going to happen, blah, blah, blah. But until we start seeing signs of it, nothing to worry about. Going to continue riding this trend, and China staying strong is a good sign to me that, you know, overall, once China starts changing and the big economies in the world, then we got stuff to start worrying about. But as of right now, I think things are looking pretty strong still. Tuesday, we had the pound manufacturing PMI. It missed expectations. Not too crazily, but it did still miss expectations. And these have been pretty solid numbers. The pound, though, was bullish off of this news. So typically when there's bearish news and bullish price action is king, as I'm sure you guys all have heard a million times. But that usually is a good sign that if bad news isn't pulling this pair's price down, it's not going to, right? So this is pretty much consistent across markets. If there's bad fundamental data coming out, and it's likely that that data should be pushing the price of an asset lower, but the asset's continuing higher, that's usually a very bullish sign. And vice versa. If the currency's moving lower, or whatever it is moving lower in price, and good data comes out, which would typically change the price to go higher, but it continues lower, that's a bearish sign. So we started the week with pound giving us some mixed signs. We got bad data, good price action. Had me a little bit thinking maybe start looking high, looking for bullish pound, but didn't really see too much of that. Then Wednesday, we had the construction PMI out of pound, missed expectations, but now we're starting to see a little bit of pound weakness in response. So we're starting to see a little bit, I guess, the back-to-back PMI reports. After the first one, there was still some optimism in the market. Second one missed, and maybe now people are starting to get a little bit more bearish. Then we had the U.S. dollars manufacturing PMI numbers, which beat expectations, a really strong reading. Purchasing managers basically surveyed on the business climate, and strong reading just shows continued confidence in the U.S. economy, especially from the business manager side of things. So this is a great sign. Then we had the FOMC meeting minutes. Again, this is the meeting that the Fed hosts 3 weeks after the each individual FOMC rate decision meeting and Federal Reserve meeting. And it's basically just a detailed account of why they made the decision that they made and what their outlook is on inflation and jobs and everything else. So they hiked rates from 1.25% to 1.5% last meeting. And basically what they got out of the meeting was they said they see tax cut legislation that the GOP just passed in the U.S. likely to boost consumer and business spending, which is why they rose the GDP expectations. However, they're not too sure on the overall impact this is going to have on the economy, but they are seeing at least a boost in consumer and business spending. The economy looks strong to them still. It's growing at a solid pace from their wording. They're still unsure about inflation being so low. Most officials do believe the medium-term outlook will reach their 2% goal and kind of get to where they're expecting, but there are some that have concern that inflation problems aren't just transitory, which is like a short-term type of problem. They think that it could be more of an issue that we're going to have to worry about, but we're going to have to just wait and see. This is why these CPI and PPI reports are very strong right now, and actually this week coming up, we have inflation numbers out of the U.S., so it's going to present us some great trading opportunities. After that, we had services PMI out of China, another beat expectations, so continued strength. This, again, these reports help the Aussie and New Zealand dollar. They're very closely related economies, so you can basically consider data out of China, data out of Australia mainly, but also impacts New Zealand. So this also helped lead the charge in the Aussie, these Chinese numbers coming out. After that, we had pound services PMI, slightly better than expected, and pound kind of a little mixed on results, slightly stronger overall this week. But as I've been showing you guys, the pound's just been kind of a little bit undecided this week, but we've gotten mixed results, so totally understanding. After that, the only real thing that we had was the Australian dollar's trade balance. Did miss expectations, and the Aussie was slightly weaker off it, but really wasn't that much movement, and you could tell the market shrugged it off as this isn't enough to push the Aussie lower. Basically, the trade balance, I've covered a bunch of times, but just for anyone who hasn't seen any other videos, is the difference between the imports and exports for the month, and it shows just like the supply and demand for the currency. So it shows how much demand there is or supply there is of the Aussie, which is what helps us determine the value of these currencies. So, yeah, pretty much wraps up Thursday, and then Friday was the big day of the week. Friday was jobs report, NFP out of the U.S., Canadian unemployment rates. This is always a big news day for the Forex markets. A lot of times, U.S. and CAD falls in the same day, so there's a big move. Starting Friday night, we had out of Europe the German retail sales, which isn't typically that big of a report. Germany is one of the biggest countries in Europe, but because the euro is such a big zone that uses the currency, one country's data in particular doesn't really swing it in value too much. However, German retail sales crushed their numbers, biggest one in over a year. You can see 2.3% versus the expected 1%. So that was a great reading out of the German economy, and just continue to help the euro with its rip higher it's been on. Just showing continued strength in the eurozone, really. So this euro is likely to continue higher, I think. But something that I think can cause some shorter term weakness in the euro is the CPI and core CPI numbers. This is the consumer price index. This is the main inflation reading, really anywheres, but in Europe especially. And the core CPI, basically they take food, energy, alcohol, and tobacco out of the report because these are really volatile prices. So they can kind of skew the results a little bit more than economists want. They want to see more of a consistent, clear data. So the core CPI can be a little bit more important when it's not factoring in those real volatile things. And it missed expectations, not by very much, but we're looking for inflation to be picking up in Europe especially. They're looking for 1.4, 1.5%, and they're barely struggling to get it. As you can see, they've missed 3 in a row. And these aren't strong. This isn't a strong inflation reading to be hitting, so they're pretty far off the 2% expectations. And if we want the European Central Bank to start hiking rates again, like the rest of the world is starting to do, we're going to need to see a higher inflation number here, right? So the economy over there is staying strong, which is what I think is going to keep the euro climbing to an extent. However, we really will start seeing a strong euro if these inflation numbers start picking up and wage growth numbers start picking up. That's when we'll see the euro start really ripping. Until then, these are really kind of the overhang. after a couple days of sell-off from this, I think the positive data everywhere else in Europe is going to keep the optimism up and the demand for the currency high and keep people investing in it. But something to keep an eye on our radar for the short term, that there could be some follow-through this week on these missed CPI numbers to end the week out of Europe. Takes us straight into the Canadian job report. Really crushed expectations, as you see here. They're expecting 1.8 million jobs created, and 78,000 jobs were created, as opposed to what they were expecting. So that's a huge number out of Canada. Trade balance missed, but that's totally overshadowed by a 5.7% unemployment rate versus an expected 6.0%. So that's a huge difference as well. Really just a killer job support out of the CAD. And as we saw, the Canadian dollar shot like 100 pips plus higher within minutes of the report coming out. So the markets really, really liked this report. And Canadian dollar was strong for a while as they were hiking rates, and then they started to see some mixed data, and we saw the collapse of the CAD for a little bit. It bottomed out, but now has continued to push higher. So reports like this is just going to add to that momentum and that strength. So really like the CAD long for the first half of this year. So as long as these numbers remain like this, I think there's no shot. There's no problem looking for longs in the CAD. And then the U.S. dollar, a little bit of a different story here. Unemployment rate did hit the 4.1%, which is the lows of this recovery, which is great. But the problem is right here. We're seeing a tightening of the job and unemployment market, a really increase in hiring, a lot of job creation. However, wages aren't going up. So this is something that is really, really been the focus of the central bank aside from inflation. As you can see, these numbers have been pretty poor consistently, and if we drop this down lower, you can see they've been poor consistently for a long time. So these average hourly earnings, which is our wage growth, how much workers are being paid by companies, isn't going up as fast as it should be. It's going up, but not as fast as it should be. So this is causing concern, and we missed the 190K job creation expectation. We only hit 148K. Still, a strong jobs market, but it's definitely not what we expected it to be. So, the dollar didn't really sell off from it. We did move down lower. If I pull up the dollar chart real quick just to go over this, we did see price move down lower to hit this support here. But let me see if I can drop it down to 4 hour, give you a better idea of what I'm showing you. See this wick down here? We did drop down lower to hit the 91.80 support, but it quickly rejected it, basically saying this data is not weak enough to continue lower, and buyers stepped in and pushed the price back up. We'll have to wait and see next week how price continues on with the week. But at least to end the week, that data wasn't strong enough to continue this sell-off. I think the markets just shrugged it off as, it's not going to be important of an aspect enough to change the Fed's outlook on the rate hikes or anything like that. So it's kind of just a brush it under the rug kind of news event and move on. So we're going to have to wait and see how the dollar reacts this week. But I think we get a little bit of a rally possibly before continuing lower. But, all eyes are down. So should just continue lower. Okay, so that takes us now into this week. This week we have the January 7th is the week. It's not the greatest week in the world, but we have a huge inflation week for the U.S. So these numbers are going to be heavily watched. Good trading opportunity, I believe. Maybe we have a little bit of a rally the first few days of the week in the dollar, and then if we see some poor inflation numbers, maybe we see that continuation of the downtrend and that head and shoulders pattern play out a little bit more. We'll have to wait and see, but just a potential outcome. So starting on Sunday the 7th, later on today, not much going on. FOMC member speaking, nothing really that we ever watch for here. And then we have Monday the 8th. The only real thing on Monday worth watching is going to be the Canadian dollars, the Bank of Canada Business Outlook Survey. So basically what this is 100 businesses are surveyed on the conditions of the business environment, like we see out of a lot of countries. And it's a leading indicator of economic conditions because getting a sentiment of how the businesses feel about the economy usually gives us an idea of what the future is going to be like in the overall economy, and it helps give us insight into the future interest rate decisions of the Bank of Canada. So they're going to take this survey into effect with their Bank of Canada rate meetings, and it's going to be calculated into their thought processing for the the rate hikes. So this is something that we definitely want to be aware of in the Forex markets, and this could cause some movement in the Canadian dollar. On Tuesday, we have inflation numbers out of China. Again, inflation in China has not really been a problem. It's not really been on the radar of any major things to be watching like it is in the Europe and US and Canada and everywhere else in the developed nations. But this can have some impact on the Aussie and New Zealand, so it is something I definitely will be watching for still. Potentially can catch some nice breakouts or so on the Australia and New Zealand pairs around events like that. Taking us into Wednesday, we have manufacturing production out of the pound. This is a monthly report on the output of the manufacturing sector. In the UK, it's typically a decent trading event, especially with Brexit looming. All these numbers are important, very data-driven right now, so we'll definitely be watching for this. Then out of Australia, we have retail sales, monthly report of consumer spending in the retail market. Last month was the first good reading they've had since August, so we'll see if December can continue with good readings. And if they can, then this is going to continue our optimism and bullishness in the Aussie. So good reading. I'll be looking to look long on the Aussie, but a bad reading could see a little bit of a sell-off, like I said, that the pair seems to be needing. Takes us into Thursday. Out of Great Britain, we have the Bank of England Credit Conditions Survey, similar to what we just read about out of Bank of Canada. It's going to be on the lending conditions, though. It's a survey of all the lenders in Great Britain to gauge the relevant level of credit conditions over there. So it gauges lenders' confidence lending money as well as borrowers' confidence borrowing money. It's a quarterly report. It's important, especially with Brexit going on, and it's something we'll definitely be watching just to gauge how confident lenders and borrowers are in the UK with Brexit and all going on. Then out of Europe, we have the ECB monetary policy meeting, basically like mini minutes, FOMC's meeting minutes like we had last week. It's 8 times a year, 4 weeks after the ECB rate decision. Gives just a detailed report on the ECB's meeting and their decision, and it's something definitely to watch for to see what they are anticipating with inflation and growth and how their detailed report is on the economy. And then Thursday, we kick off with these inflation numbers out of the U.S. First, we have producer price index. Not typically the strongest trading event. It's the inflation reading from the production side of the economy. Not as important as CPI, but still a strong reading. Definitely something highly watched and something that we can really looking for trades around. Got the trade balance out of China. Again, not a huge event, but still something to keep an eye on. Usually have a pretty positive trade balance. They're a heavy export country, but it does impact the the Australian dollar and the New Zealand dollar. So it's definitely something that we will be looking for, but nothing too crazy of an event. Then we have the event of the week, really. U.S. dollars, CPI, and the retail sales. Retail sales is kind of overshadowed by CPI, but if they both are on par with the reading, if they're both negative or both positive, usually that can be the best moves. All eyes are going to be on the U.S. inflation data this week. It's a huge factor on the Fed and their decisions for rate hiking, and this is the first reading of the year, so it's going to be big start to the year to see what we're looking like, see if we're going to hit the Fed's 3 rate hike expectations that they're calling for. Weak U.S. dollar will likely come if we don't see strong CPI reading, as CPI reports typically generate 50 to plus pip moves initially and then some follow through typically. But either way, it's still something that we definitely want to be aware of. And retail sales as well. We've had a strong reading the last 2 months, and this is for the holiday Christmas month, December. So we could see a very strong reading here. Obviously, this is all factored into the report when they calculate this, but still should be a good reading to watch out for and pretty important. So that is pretty much going to cover next week. If you guys have any questions, feel free to reach out to me, corefxtrading.com. Also, T3 Live here. Make sure you follow and subscribe and like their page. Great resource here. They've got a lot of awesome content, and I really appreciate, guys. Leave some feedback. If you have anything you'd personally like me to go into in these videos or any questions or anything like that, feel free to leave comments. And I really appreciate you guys taking the time to watch these, and I'll talk to you guys next week.